In today's fast-paced financial landscape, many people rely on banks as the safe haven for their savings. It is common knowledge that banks offer a sense of security and often provide insured deposits. However, with the low interest rates and the ongoing effects of inflation, leaving large sums of money in a traditional bank account is not the best strategy for growing wealth. In fact, the wealthiest individuals have long known that the key to accumulating and preserving wealth lies outside of conventional savings accounts. In this video, we will delve into why it is advisable to reconsider keeping money in a bank and explore the 5 assets that the rich use to build and maintain their wealth. Why not keep your money in the bank? The idea of keeping your money in a bank may seem comforting, but it comes with some drawbacks. First and foremost, the interest rates offered by savings accounts are incredibly low. Most banks provide interest rates that barely exceed 0.5% annually, while inflation typically hovers around 2% or higher. This means that while your money may technically increase, its purchasing power is eroding over time. By keeping large sums of money in the bank, you are essentially losing value as inflation outpaces the growth from interest earned. Furthermore, money sitting idle in a bank account misses the opportunity to be used for investments that could generate higher returns. Rich people understand that money needs to work for them, and by keeping it in a savings account, they are forgoing the potential to invest in assets that could offer exponential growth over time. In addition to low returns, bank accounts also offer limited security. While most deposits are insured up to a certain amount, risks still exist, such as changes in bank regulations or potential economic crises. To mitigate these risks, wealthy individuals often diversify their wealth in ways that protect them from these uncertainties. Real estate, the key to passive income. One of the most popular and historically lucrative investments for the wealthy is real estate. Real estate has long been recognized as one of the safest and most profitable asset classes available. By investing in property, individuals can benefit from both consistent cash flow and long-term appreciation in value. Rental properties are a primary source of passive income for rich individuals. Instead of keeping money in a bank account, the wealthy invest in residential or commercial properties that generate rental income. This cash flow offers a steady stream of earnings, far outpacing the meager interest offered by savings accounts. Additionally, real estate properties tend to appreciate over time, especially in prime locations or thriving markets. While short-term fluctuations in the housing market do occur, the long-term trend has been one of consistent growth, making real estate a reliable wealth-building asset. Real estate also offers tax advantages that further incentivize wealthy individuals to invest in property. Deductions for property depreciation, mortgage interest, and repairs can significantly reduce taxable income. Moreover, by leveraging debt to purchase properties, investors can control assets worth much more than their initial investment. This strategic use of leverage amplifies the potential returns, making real estate an ideal asset for those seeking to grow their wealth. Stocks and equities, growing wealth through the stock market. For wealthy individuals, the stock market has been a consistent and powerful tool for wealth creation. While the stock market can be volatile in the short term, over the long haul, it has consistently outperformed many other asset classes. Investing in stocks offers significant potential for both capital appreciation and passive income through dividends. The rich understand the power of compound interest and long-term investing in stocks. By holding stocks in strong, well-established companies, they position themselves to benefit from the growth of those companies. Over time, the value of these stocks increases, providing investors with substantial returns. Additionally, many stocks pay dividends, offering a steady stream of income without having to sell the underlying shares. Dividend-paying stocks are a key part of many wealthy individuals' portfolios, as they provide consistent income. Moreover, stocks offer liquidity, meaning that investors can quickly convert their holdings into cash when needed. Unlike real estate, which can take time to sell, stocks can be sold within minutes. This flexibility makes stocks an attractive investment vehicle for the wealthy. By investing in a diversified portfolio of stocks, including both growth and dividend-paying companies, the rich are able to mitigate risks while still benefiting from significant returns. Precious metals, a hedge against inflation. Precious metals such as gold, silver, and platinum have been a trusted store of wealth for centuries. While modern financial systems have evolved, the appeal of precious metals remains strong, especially during times of economic uncertainty. These metals are seen as a hedge against inflation and currency devaluation, making them an essential part of a wealthy individual's portfolio. Gold, in particular, has maintained its value over time, and its price tends to rise when inflationary pressures increase or when the stock market experiences instability. Rich individuals often invest in precious metals to protect their wealth from the erosion caused by inflation. When the purchasing power of fiat currencies decreases, the value of gold and silver typically rises, making them a safe haven for investors seeking to preserve their wealth. There are several ways to invest in precious metals. Some individuals choose to buy physical gold, silver, or platinum in the form of coins, bars, or jewelry. Others prefer to invest through exchange-traded funds, ETFs, or stocks in mining companies, which provide exposure to precious metals without the need to store the physical assets. Regardless of the method, precious metals are an important diversification tool that can protect wealth from both economic and geopolitical risks. Private equity and venture capital. Investing in businesses. For the wealthiest individuals, investing in private equity and venture capital presents an opportunity for significant returns. These forms of investment involve providing capital to privately held companies, either through buying out established businesses or funding startups with high growth potential. While these investments tend to be more risky and illiquid than stocks or real estate, they offer substantial rewards for those willing to take on the risk. Private equity investors typically look for undervalued or struggling companies that they can restructure and improve to increase their value. Through buyouts, wealthy individuals gain control over the company, allowing them to influence its management and strategy, which can lead to greater profits. Venture capital, on the other hand, involves providing funding to startups with the potential for high growth. While venture capital investments are risky, they can yield significant returns if the startup becomes successful. Investing in private equity and venture capital allows wealthy individuals to diversify their portfolios beyond traditional stocks and bonds. By investing in businesses, they gain exposure to industries and opportunities that may not be accessible through the public markets. However, these investments require substantial capital and often involve a longer time horizon before realizing returns, making them more suited to high net worth individuals. Cryptocurrency, a new frontier for wealth building. In recent years, cryptocurrency has become a prominent asset class for the wealthy, thanks to its high growth potential and decentralized nature. While cryptocurrencies like Bitcoin and Ethereum are known for their volatility, they have also provided significant returns for those who invested early and held their assets over time. For the rich, cryptocurrency offers a high-risk, high-reward opportunity to further diversify their portfolios. Cryptocurrency operates outside traditional financial systems, meaning that it is not directly affected by government policies or inflationary pressures in the same way that fiat currencies are. This decentralization appeals to many wealthy individuals who see it as a hedge against inflation and government intervention. Cryptocurrencies also offer a level of privacy and anonymity that is not available with traditional investments, which can be appealing to those seeking to protect their financial privacy. However, it is important to note that cryptocurrency is still a relatively new and highly speculative asset class. While the potential for high returns is undeniable, the volatility and regulatory risks associated with cryptocurrency mean that it may not be suitable for all investors. Still, for those who are willing to take on the risks, cryptocurrency offers a new and exciting way to build wealth and diversify an investment portfolio. So, that's it for today. If you like this video, then please hit the like and subscribe button for more videos. Thanks for watching. While keeping money in a bank may seem like the safest option, it is not the most effective way to grow and preserve wealth in the long term. The wealthiest individuals understand that in order to build and maintain significant wealth, they must invest in assets that offer higher returns and provide protection against inflation. Real estate, stocks, precious metals, private equity, and cryptocurrency are all valuable tools that the rich use to diversify their portfolios, generate passive income, and secure their financial future. By exploring these alternatives to traditional savings accounts, individuals can begin to take control of their wealth and position themselves for greater financial success. Whether it is through the steady cash flow of rental properties, the long-term growth of stocks, or the protection offered by precious metals, rich people use a variety of strategies to ensure their wealth continues to grow. Instead of keeping your money in a low-interest bank account, consider exploring these wealth-building assets to secure your financial future and build lasting prosperity.